Good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, June 30th, 2021. The S&P did see a little bit larger of a move today, not spectacular, but it did manage in the after hours, right, between 4 o'clock and 4:15. The market did move to a new all-time high at 42.94 before closing just 50 cents lower. That does bode well with our current count. And now what I have done is I have moved the third wave, which I believe I had here. I've moved it up and then moved the 4 up as well. It fits much cleaner because overnight in the globex session, we did dip pretty strongly. And we got down to, excuse me, 4,269.25. And that did not sit really well with putting a 3 and a 4 here and then having that, because then it just kind of destroyed that wave. So I moved it all higher. And so it doesn't really change our outcome. It doesn't change our expectations. It just better fits the move as it is rolling out and as the market continues to tell us what it's doing. And the other thing is like when you have a wave count that is active, so it's building each day, then you're going to be making adjustments because the market is going to tell you that this is really what happened. And now you can make your adjustments accordingly. So what I've added are some slight new Fibonacci retracements, not retracements, extensions, and those are based on what now I believe wave 5 could do, because wave 5, the sub-minute wave 5, which is now in progress, is related to the third wave in terms of Fibonacci retracements. We now can, and let me first premise by saying any breaks to these levels if we can count 5 completed waves, and that would be we have 1, 2, and then 1, 2, and this is 3 of 3, 4, and a 5 of 3, and a 4 and a 5. That's what I think we still have left. But any of these levels, if I can complete the count fully with all the subdivisions, that would complete the whole cycle or sequence, and the sequence on top of that, and the sequence on top of that, and one more on top of all of that. So, but ultimately, I think we do at least get to 4,301. And I'm thinking that we got enough stops there that it might trigger and we'll get a push up even further. Ultimately, subminute wave 5 would equal 0.618 times the length of a subminute wave 3 at 4,321.47. So we get this great little zone right here. The 0.618, the 70% basically at 4,269, and then the 786 level at 4,335. So we have about a 34-point range where this could top out and finish and still meet that long-term goal that everybody's talking about getting above 4,300. That has been the ultimate top that people have been looking for forever, which I think is why it's taking so long to get there, because nobody wants to buy it. I wouldn't. I'm thinking that's where the top's going to be. Why do I want to get in there? But somebody's going to have that opposite idea, and that we're breaking out and now we're going to the moon. In any case, tomorrow, again, I would not be looking for this size of a 4th wave, not out of this little tiny sequence. So they should remain very shallow as we complete this entire sequence. It should remain shallow. Serious breaks, and we're now talking, I mean, we start coming back below 4,284 or 83, we're starting to really put something together like we're done. And if it breaks below 4,270, I'm going to call it, then we're likely we've made our highs. And we'll wait because the market will tell us. But again, remember that what I'm kind of looking for is if after we make new highs, they just kind of come in and they start selling it, but a lot more than what I've seen so far. So rejection of a level at this height would, in my view, be a pretty strong downturn immediately if it's rejecting that level. And I do think that that's what's going to happen. What do we have out there waiting that can happen? Well, we have unemployment numbers tomorrow morning, new unemployment, file, et cetera. Then we have the employment situation numbers coming out on Friday, plus I think some additional economic news. And then we're sitting on the cusp of the beginning of second quarter earnings reports, which start, I think, about the second week, like July 11th, 12th, 13th, all in that area. We start to enroll, and it really rolls through the end of July. So there's lots of things that can really just drive that earnings report. Boom, this thing's cooked, and they'll start hitting the market. And so we've got a lot that could turn it, but also we have a lot that could just really force it even higher. On the same token, if those earnings reports start blowing the doors off, which would be the surprise, because I haven't really heard anything within the market that they're kind of like, oh, they're expecting X to really blow the doors off. Apple continues to trade higher, and again, making its own new post-split new highs, which is good. Amazon, iffy. So I mean, these are the door busters, and they blow doors off of it. So we got Apple, Amazon, Google, Facebook already, getting out of that antitrust suit that was being filed. Already put 15 points onto its tally, and so they really have to blow the doors off to push this market even higher. Well, we have Intel, we have Microsoft, we have Netflix, we have Nvidia, we've got Tesla. So we've got a lot of big players that are out there that could really report seriously good earnings. We'll have to wait and see. For tomorrow, I am anticipating that we may get small pullbacks, but I would anticipate that the market does eventually, or should quickly, get itself above 4,300. That would be a sigh of relief on my part, because that's the target that I've been putting out there now. And every Fibonacci relationship that I put together suggests the same thing. So I'm going to let the market tell us. We have our upside targets. We have downside. We have the no break zone now. So we're starting to develop that, which I think is really going to be very helpful because we're into that final sequence. So now I can start putting, if it starts to break below this level, boom, we're going to have to say that this is done. And now we're heading lower. And it actually should not take us, sit and waffle there and break and then sit and wait. I mean, if it's going to break, it's breaking. So we're already going to know because if they're still continuing to slide, you just get on board. So continue to trade what is in front of you. Use your moving averages. I know I preach this every day, and that's what I'm going to continue to do. In my trade room, that's what we're using. We use the moving averages, and they do provide entry, they do provide exits, they do provide guidance for trading intraday. I'm going to leave it there, and our next update will be Thursday, July 1st.